Perfect. Thank you. Welcome everyone to today's webinar, Changing the Debt to Equity Ratio for Farmers of Color. And thank you so much to California FarmLink for bringing us this webinar idea and for inviting today's funder speakers to share their unique perspectives on this topic. We're really looking forward to diving in. So before we get started, I do want to encourage everyone to introduce yourselves in the chat. And please include the native land that you're calling in from as well. Thanks so much for Kavita for modeling that for us in the chat. So for those of you who may be newer to the SAFSF network, I'd like to share a little bit about who we are. SAFSF, Sustainable Agriculture and Food Systems Funders, but much better known by our much shorter acronym SAFSF, is a leading PSO or philanthropic serving organization for funders seeking to drive change and support of just and sustainable food and agriculture systems. We're a small nonprofit with a staff of 11 that are spread across 8 states with 100 grant makers and investor members. Our mission is to amplify the impact of philanthropic and investment communities in support of sustainable food and agriculture systems. So with that being said, I'm excited for us to dive into today's content, and I am going to turn it over to Esther Park, the CEO of Seneca Capital, our moderator for today, who will introduce herself, and we'll move into introduction of the speakers. Over to you.
Thank you so much, Erin. Great to see everyone. I am Esther Park, as Erin mentioned, the CEO of Seneca Capital, which is also part of the No Regrets Initiative. So as Seneca, we are making investments, loans and equity investments into food and farming enterprises engaged in regenerative ag across the country. And so we've been doing this work and we've been in partnership with the folks who are speakers on this call. So it's been really fun to get them all together and talk about the issue at hand, just around debt versus equity versus what farmers need, particularly in communities of color across the United States. So with that, I'd love to introduce our panel and actually have them introduce themselves. So Lolita, let's start with you. Lolita is the Director of Investor Relations and Programs at Pot Liquor Capital.
Thanks, Esther. Hello, everyone. So good to be here with you all. It's always good to be in a space with other mission-aligned and like-minded folks. As Esther mentioned, I'm Lolita Nunn. I'm the Director of Investor Relations for Pot Liquor Capital. I really come into this work after spending 14 years in the financial sector and then transitioning to the nonprofit sector. Some would say I'm a reform banker, but I just love to say that it's the culmination of my career journey that has brought me to this place to really reimagine how capital flows to support people and communities that have been historically and systemically left behind. And happy to be working with Pot Liquor Capital, where we are really supporting and driving outcomes that support BIPOC farming communities. We work with not only traditional farmers, but ranchers, fisheries producers, and really we're modeling a holistic approach that supports farmers at that intersection of social, racial, and climate justice. At Pot Liquor, we use not only capital, non-extractive capital, but technical resources, capacity building services, flexible blended resources to support the farmers where they are and helping them to scale, grow, thrive, connecting with distribution as well. So it's great to be here and be part of this great conversation. And I'll turn it back over to you, Esther.
Thanks, Lolita. Next, I'm going to introduce Michael Riley, who's the Executive Director of Foodshed Capital. Please introduce yourself.
Great, thanks, Esther. And thank you all for being here. It's great to see some familiar faces. Appreciate everybody taking the time this afternoon. As Esther said, I'm with Foodshed Capital. I am the founder and executive director of Foodshed Capital. I'm coming to you today from Virginia. We are a nonprofit loan fund providing low-cost capital and technical assistance to small-scale regenerative farmers, prioritizing BIPOC-led businesses. Let's see, I founded the organization in 2018. We were just a very small, humble, slow money program making microloans around Central Virginia. But we have grown quite a bit since then, thanks to some good mentorship from California FarmLink. We have deployed, let's see, more than 100 loans totaling $2.5 million in capital up and down the East Coast, from Georgia to Vermont and then west to Kentucky. In 2020, we were certified as a CDFI. We're one of only a small handful of CDFIs around the country that focus entirely on food and agriculture, like California FarmLink, who again, has been a really just invaluable mentor for us. Most of the loans that we do are under $50,000, which is about the most appropriate limit for the types of farms that we work with, bearing in mind that a lot of most regenerative farms on the East Coast are pretty much smaller scale than typically what you find out, I guess, west of the Mississippi. Most of our loans are for equipment and infrastructure. To this point, we haven't been doing a lot of outright land acquisition, but we've done quite a few land deals through participations and integrated capital approaches, and I think we'll be talking a little bit more about that further on. We do a lot of bridge lending for USDA and state grant programs, and so that's something that we really focus on more and more recently. And as I mentioned, BIPOC farms are a priority for us. In the past 2 years, we've increased our deployment of capital to BIPOC businesses to more than 75% of our total. So again, that's a snapshot of who we are, and look forward to the conversation ahead. Thanks again.
Thank you, Michael. And finally, I will turn it over to Brett Malone, who's the Chief Business Strategies Officer at California FarmLink.
Thanks, Esther, and thanks to SAFSF for agreeing to co-host this webinar with us. Really pleased to have the opportunity to share our work and find ways to move it forward together. Excuse me, with you all. So as Esther mentioned, my title is Chief Business Strategies Officer at California FarmLink, and my primary function in that role is to oversee our lending, but I also work closely with our land and business education program to ensure that the way that we approach our lending, similar to what Lolita and Michael shared, is very integrated in meeting farmers where they're at. Make sure that the capital that they're accessing is really going to meet their needs. I do this work primarily because I grew up in agriculture and realized, farming probably wasn't the best career path for me, but felt really compelled to serve farmers. And so I'm, humbled and privileged to be able to play the role that I do. And FarmLink has been around since 1999, and thanks, Michael, for the kudos. We really have enjoyed working to support your work. We were founded in 1999. I joined the board in 2003 when I was serving as the executive director of ALBA, the Agriculture and Land-Based Training Association, which is a farm worker to farmer small farm business incubator program. And so where I spent about 10 years in that role, I really saw how access to capital was a barrier for farmers that were trying to not only start but grow their businesses. And I had the opportunity to join the FarmLink staff around the time it became a CDFI in 2013 and really learn the ropes of agricultural lending. And Esther has been an important mentor for me and for us. I really appreciate her support and Cienega's support. So FarmLink invests in the livelihoods of farmers, ranchers, and fishers to build and restore healthy communities and natural environments. And we do that by helping them access affordable and fair financing, helping them learn how to create business resilience and secure land for farming and ranching. And similar to what Michael described, we offer loans for pretty much all the needs that farmers have, although it's primarily focused in operating and infrastructure, but increasingly bridge loans to access USDA conservation programs, land purchase and refinance, as well as business debt. And our staff are mostly located in the Monterey Bay area, the central coast of California, and the Sacramento area, but we serve the entire state. I live in the central coast on the lands of the Amamutsan, and happen to be right now in the land of the Mapuches in Chile, visiting family. And yeah, I'll turn it back to you, Esther.
Thanks, Brett. Thanks for joining us from so far away. I
Yeah.
didn't realize you were out there. Great. Well, let's dive right in. I'm really excited to get into this conversation because all three of you are doing such really interesting and innovative things. I just did want to give a little bit of frame setting just around the question and the issue at hand. I think, you know, one of the things that we've seen is that farms and farmers are often living at the edge, right? That's a pretty thin margin business. And all three of you are in the lending activity. And so, you know, what are the opportunities for farmers to grow equity? Farms are not really something that, you know, that is appropriate for a typical equity kind of investment, right? So we're already dealing with kind of these factors around farming in general, along with rising land prices. And I think that the opportunity for farmers tends to be more around building equity in their land, but also, you know, building equity in their business is super important as well. And I think particularly when we're talking about communities of color, there are lots of things that exacerbate that problem for immigrants and farmers of color. And so, you know, there's a great woman named Jillian Highshaw, which some of you may know, and she wrote a book called Systematic Land Theft. And I think if you haven't read that, I highly recommend it as just sort of a historical look at how Black folks in particular have been dispossessed of land over time, not to mention the dispossession of land from Indigenous communities as well. You know, and with rising land prices, it's tough. It's tough to access land. It's tough to purchase it. It's tough to make it pencil out from a farming operation. And so I think you know, if we're really interested in supporting a diverse group of farmers in this country, we need to think differently about what we're doing and how we're doing it. So I'm really excited to bring to the fore these three folks. And maybe Lolita, let's kick it off with you again. I'd love for you to talk a bit about reparative capital. That's something that we discussed as a group. And what does that really mean for you? What does that mean in terms of what Pot Liquor is doing? And how are you addressing the need for reparative capital?
Yeah, thanks, Esther. And you've said some really important things. Land is just one component of the disinvestment that's happened over time to farmers of color. And with Pot Liquor, our work acknowledges that that debt should not be on the farmer. Using what we call as reparative capital, which is our way of addressing and repairing those past harms, bringing in some reparations in the form of flexible, non-extractive capital, low interest rates to the farmer, no interest rates for a period of time before it would transition into a principal and interest payment. We really see our work as being relational with the farmer and not transactional, and building that relationship with the farmer over time. You know, we take pride in having a board that's farmer-led to help shape and inform our decisions. Where, you know, I wear a financial hat and a development hat, and I'm not a farmer, but having that knowledge on the team is ever so important. We want to really help the farmer be on a pathway to not only address the wealth equity issue, but also help them become more regenerative in their practice. And leading with that intentionality, working alongside the farmer and providing with not only that flexible capital, but using our knowledge, our social capital, our networks, providing them with grants that can help provide that capacity building and technical assistance, making sure that we're listening to their needs and meeting them where they are. So many times, an ideology of a firm or a traditional bank inputs their own ideology on the farmer and making them jump through hoops, or the 5 C's of credit, where we want to enter into that relationship and not necessarily look at a credit score. Our process is a little bit longer. We have an investment committee that we renamed a resource committee because we see that our work as really intentional in working to serve the needs of the farmer that we have. And alongside of that individual farmer level and providing them with the capacity to thrive and grow and scale, we also see the work that we're doing is making an impact on the community level. That farmer can then become a part of a bigger community of practice, sharing knowledge and resources with other farmers that are in that cluster, whether it's the Midwest or the South, and sharing that information, technology, and resources, and also wanting to make an impact on the system as well, collectively using the farmer's voice to help shape and inform policy. We're on a big farm bill right now. How can the farmers collectively use their voice to influence how money is then shaped and provided to the community that is providing the food to the folks who are on this Zoom call? You know, the impact of our work, we utilize grants, recoverable grants, and program related investments that we use to redeploy to support the farmers. We see this as a return on the impact of the work that we are doing, the impact of being able to sustain the number of farmers. Right now, it's less than 4% of farmers in the world, in the country, are farmers of color. How do we keep that number from going any lower? And that's one of the reasons pot liquor exists, is to address that and bring in that equity, where we see we have to look at the loans and the deals that we do with farmers of color a little bit differently than traditional financing. And that reparative lens that we use when we enter into these relationships is one of the most important things, because that farmer is going to need resources over time. Working with one farmer is working with one farmer. The needs are going to be different for each farmer, and being able to provide them with those resources today, and then bringing in other folks like Mike and Brett to be part of a capital stack where land can be purchased to enhance that farmer. So it's a collective mission. It is impact driven, and we really see it as the stepping stones and changing the trajectory of the farmers going forward that we work with.
Yeah, thanks so much, Lolita. That's super important. And I think one of the things that occurred to me as you were talking is that, you know, all 3 of the organizations that you all represent are nonprofit organizations, and you're all providing really heavy technical assistance to the farmers, right? And that typically is a grant-funded activity. So I just want to put a little bit of a pin in that. We'll come back to that. But I think just it's important to recognize how much additional work it is, and to not underestimate the cost of that work, right? Because that is the super important work that will make the farmer successful at the end of the day. So appreciate all that you're bringing to that and the intentionality that you are, Lolita. So thanks. I want to turn to Brett. So Brett, your constituency is a little different from Lolita and Michael's. I think here in California, we have a lot of immigrant farmers, particularly Latinx farmers.
Right.
And so I feel like that's a big part of who you're addressing. And it's because we're close in terms of geography, but also in terms of working relationship. It's been really exciting to see the kinds of innovations that you all are consistently ideating around how to better serve the needs of this community of farmers. So I'd love for you to just chat a little bit about what you've seen in terms of farmers' needs in building equity or wealth, and what kind of innovations are you piloting around that?
Thanks, Esther. First, I just want to say yes to everything that Lolita said, and and to what Esther said about, the work that it takes and the cost. I mean, it's just something that I'm sure Lolita and Michael, you grapple with, and at FarmLink, it's just a topic of discussion every day. How do we better, align our resources and staffing to move people through what we have come to start calling our client journey. When they come for capital, looking for capital, are they ready, or what do they need to be ready, and how do we support them in that process? Historically at FarmLink, most of that work has been done by loan officers, and we're slowly kind of building out a structure where the technical assistance that's needed pre-loan or even post-loan can be provided by our land and business staff or someone external, right, that's qualified. So just wanted to touch on that, since it's such an important aspect of our work and a daily challenge for us and for the folks that we serve. So just to sort of reiterate some of the things that Esther said at the top, I mean, financially speaking, agriculture is an inconsistent and precarious business, right? Cash flow is seasonal, and payment terms for farmers are not usually very favorable for them. Yields and prices vary from year to year and aren't always adequate to cover, fixed and variable costs. And then you layer onto that the systemic barriers that we've been talking about that are faced by communities of color. And it's a daunting endeavor to build equity and wealth as a small BIPOC farmer. And so, as a CDFI, and given where we're located in California, as Esther said, a lot of our clientele are Latinx or Hispanic, and our CDFI certification, we designated low income and Hispanic or Latino farmers as our target markets. And so 60% of our capital annually needs to be deployed to those target markets in order to maintain our certification. But we have some flexibility there with the 40% and aim to serve other BIPOC farmers and fishers that aren't served by the system, the financial system. And so the way that we think about meeting our mission and serving farmers and fishers that are left out of the financial system, we think about it as addressing systemic barriers first, but also for aiming to control for perceived risks and managing actual risks. And so, just by virtue of the fact that we exist, we're helping to address the systemic barrier of access. But there's a lot of work, as I mentioned earlier, that needs to go into making sure that folks that are wanting to access capital are in a good position to do so. Another systemic barrier is personal and business financial literacy. And so, we address that through our education, both in group settings and individually, delivered in a culturally relevant way by staff, that come from the communities that we serve whenever possible. And in terms of risks and perceived and real risks, I think, as we all know, financial ratios are a tried and true tool for financial institutions to manage their risk. And the ratio thresholds that are applied there can become systemic barriers because they end up excluding people that based on factors that may or may not increase risk or can be mitigated through the types of services that we all offer: education, individual technical assistance, and sort of helping them access a broader network of professional services. So for instance, credit score, is a very common one that's used, and we don't have any specific requirements around credit scores. If there's no credit score, that's not an issue for us. If there's a poor credit score, we're going to ask why, and we want to empower the client with that information about how this is impacting the underwriting that we'll need to do, and how it may impact their ability to access credit elsewhere. The loan to value, or the financial, sort of skin in the game, so to speak, that a farmer is able to put in. I mean, this can be managed by integrated capital, providing grants, by the lender obtaining guarantees. So we use the Farm Service Agency Guarantee Program, but we also, in partnership with Cienega, and Globetrotter have been able to put together a guarantee program for farmers that aren't documented and so aren't eligible for FSA guarantees. And we've learned, as part of putting that program together, that the risk associated with making loans to undocumented farmers is no greater than making loans to documented farmers, and so that's where the perceived risk versus the actual or real risk, an example of where it comes into play and why it's important to look at that. And then another thing that we've been looking at in terms of risk is debt service coverage. Really, does the farmer generate enough revenue to make the loan payments? And in some ways that's just very basic, right? Is there enough revenue generated? But there are tools that can be used, such as working with a farmer to understand how they can better manage their cash flow, but also potentially creating a payment reserve so that when something unexpected comes up, they have a backup there. It's simply not that they're not going to be able to make the payment. So really, I think along the lines of what Lolita was saying, trying to make the relationship more relational rather than transactional, thinking about what are the reasons behind these barriers and how can we address them creatively. I'll just share a couple more things in terms of products.
Brett, I wonder if you could just wrap it up in like a minute or two so we can get to
Sure.
people.
Yeah, absolutely. And the things I'm going to mention are related to some policy work that we're doing that we can talk about as well. So one is what we call a development loan, or essentially a working capital loan for farmers, because the most sort of typical structure for an operating loan for farmers is that it needs to be repaid, from the revenue from the crops that year. And that can be really difficult for a farmer to do, especially in the early stages of business. So I'll talk about that more a little bit later. And then down payment assistance, loans and grants. So really trying to address that barrier of coming up with a down payment to buy land, along the lines of some first-time home buyer programs.
Great, thank you, Brett. And we will definitely circle back to this policy piece. But next, I want to just turn it over to Michael, because I think you all are developing something really interesting with this LND fund that you've developed. And I'll let you tell folks what LND stands for. But I'd love for you to talk a little bit about just context setting in terms of like, why did you feel like this was the next thing that you needed to do, and what is it?
Sure. Great. Yeah. Thanks, Esther. Yes, certainly really appreciate the opportunity to talk about this initiative and something that continues to be a work in progress for us. Just for some context about, how we got to this point and what the initiative is all about, I need to kind of go back to sort of our roots and our history. In 2019, we made our very first loan to a Black farmer at 0% interest. Unsecured loan. It's a pretty small loan, but still nonetheless 0%. And we have maintained that practice ever since, 0% unsecured loans to Black farmers to this day. It's just been something that we have remained committed to. I mean, our goal has always been to kind of like what Lolita was saying. I mean, everything she said, I echo. It's just, I think, very much aligned with how we've tried to do our work. And I will say it's my turn now to give kudos to Pot Liquor, because, as a white-led organization, we know we always have a lot to learn in doing this work. And so we have certainly leaned on them quite a bit. Mark Watson, Lolita's colleague, has always been more than gracious to bend over backwards to answer my questions. And so we're so grateful and appreciative of that guidance. So, as I mentioned earlier, we have done some land work, but about a year ago, we just felt like we really weren't doing enough to move the needle. We had several requests for funding from BIPOC farmers in the Mid-Atlantic for land purchases, land acquisition. And given the high cost of values in this area, as it is in many areas around the country, these opportunities were just really, really cost prohibitive. And even at 0% interest, the monthly payments were just unmanageable. And so, there was just, and even if they were manageable, there was the burden of debt and the imposition of extractive practices that kind of put us face to face with becoming the type of lender that like we were opposed to becoming. So it's like, how do we do this? So we just began having conversations with peers, including Jim Oldham from Equity Trust. Shout out to Jim, who's on this call. He was very helpful and just kind of giving us some creative ideas. And we were really just looking to find a way that we could create, or at least inspire, a model that was more reparations focused when it came to BIPOC land security. We just felt like that the traditional investment model was just repeating, the same old paradigm. As it turns out, USDA was coming out. This was like right around this time last year. So I think at the end of August, USDA came out with their Increasing Land Capital Market Access Program, which we applied for with 9 other partners along the East Coast. And the cornerstone of that application was this concept of LND, which stands for loan, not debt. Also sort of kind of plays into land. And really what it is, it sounds a little kind of quirky, but the idea was really to create this integrated capital approach, relying mostly on philanthropy to create a way that would rightfully return land to BIPOC farmers, again, in a way that was non-extractive, that did not burden them underneath debt. In a nutshell, the concept is really about building equity through essentially, the idea is a 0% unsecured land loan, repayment only required if the land is sold. And it can really only be accomplished without the expectation of return of capital from investors. So, again, a lot of impact investors out there who are just really mission aligned and have been, I think, invaluable to the work of all three of our organizations and some others on this call. But in this case, we just feel like that investment model is it's kind of going down the same old path. And so we were really excited about the concept. Unfortunately, our project was not selected by FSA. We know it was a very competitive program. Kudos to Zach Ducheneau and FSA for selecting a lot of really, really good projects. So, even though we're disappointed, we certainly feel very optimistic about what that program is going to do in the next several years when that money is deployed. So we're continuing to work on this. I mean, our whole sort of approach from the beginning was that like this wasn't intended to be anything proprietary for Foodshed Capital by any means. It was really like more of an open source kind of approach or concept that we were trying to come up with that like we could really try to use to inspire and galvanize conversation around this. And we really are, excited about the potential, and we'd love to see more conversation about it. Folks on this call are interested. I mean, we'd love to convene more dialogue and ideally maybe find a way that funders can, really buy into a type of concept that can be applied and used by different organizations who are working with farmers in different parts of the country. Ultimately, for us, it really is about truly trying to find a way that is indeed honoring the idea of reparations. And so definitely look forward to talking further about it, answering any questions that folks have. Appreciate the opportunity to talk about it. Thanks.
Yeah, thanks, Michael. It's so interesting, and I'm really looking forward to following your progress on all of that. And because you're doing 0% loans, I mean, I just want to make sure that people know that you're raising philanthropic capital for the LND fund.
Yes,
Yeah.
that is absolutely correct. That is,
Yeah.
it would be philanthropic capital. And in our everyday work, we raise, more integrated capital. We have, a lot of impact investors who've supported our work. We're not really too well liked. I shouldn't say that, but we because we loan at 0%, it makes it tough being a CDFI. Let's put it that way. We remain committed to that because we believe, again, ultimately that is truly what we can do to help uplift Black and brown farmers who have had so many disadvantages. And if, we're just trying to do everything we can, and we feel that is one thing that we can do. But yeah, it does kind of make it challenging. So there again, we do appreciate philanthropic capital as much as possible to support that work.
Right. Yeah, it's always the innovators that have to figure out the way forward, right? And then everyone else can come through. Well, great. All three of you have mentioned policy, that you're involved in policy work somehow. And there's a lot of resources out there, right? So one of the things that folks can point to is, USDA, there's a lot of USDA loans. And, you both, Brett and Michael, mentioned FSA. So the Farm Service Agency is a big source and resource for the work that you do with farmers. But, as we talked about earlier, I think there's the helps that it can give, and then there's still some places where it falls short, right? And so I know that you all are working, all three of you are working just sort of on the edges of the policy work to see if we can't push some of the programs to be better serving towards farmers of color. And I wonder if you all could, I'm not going to point to one of you at a time, but if you could just sort of jump in discussion style around, like, what are some of the things that you're working on specifically regarding that, and what are the opportunities? Like, where can USDA and FSA do better to help serve these folks?
Yeah, I'm happy to jumpstart this conversation. And Pot Liquor Capital is a national charitable loan fund, and we really believe in the self-determination and supporting the self-determination and capital distribution. And that includes like the political advocacy piece. We're not lobbyists. However, that political advocacy is ever so important. What is working well? Mike mentioned Zach Ducheneau. He is open to having conversation. That is a very good first step in having those transparent conversations where we're able to bring to light some of the real issues that farmers of color are struggling with today. For instance, we're working with a farmer who is an ex-military who was denied a FSA loan. However, he received a traditional loan, was approved for traditional financing. So how can this be, right? Without his tenacity of following up with the FSA to ask why was I denied, and long and behold, they're like, well, you shouldn't have been denied. Here's your approval. So you take that scenario and you multiply it by how many other farmers of color have applied for FSA loan, then denied, and did not have that tenacious behavior to follow up and file a grievance, or why did this happen? And so taking that real life lived experience of a farmer that Pot Liquor is working with, and having those transparent conversations with FSA and bringing to light that there needs to be some change that happens at that level to make sure that this doesn't continue to happen. How are those FSA agents interacting with the farmer? What is their protocol? What do we need to do to streamline this application process to make it more user-friendly for a farmer who's in the field 12 hours a day, who's not sitting on a computer in front of a desk? And so I think there's real opportunity to continue to have those transparent conversations, and then use those conversations to really influence the change that needs to happen. I'll get off my soapbox.
I just would echo that. I think what we find with the farmers we work with, the obstacles that they perceive, I think many of them are real, but whether it's real or not, they perceive obstacles in the application process for funding from USDA, I think is why we wind up working with a lot of the farms we do, and because we try to reduce those obstacles and as much as we can and make it easier. So I think, I think where I would really like to see policy change is just, shifting, not only making funding more accessible. I just, when I think about when we apply for USDA funding, what we have to go through. And, our team, like last week, we applied for a USDA grant. We had 4 people working on it. And, farmers don't have that time. They don't have time to deal with like grants.gov and all that, stuff that all the hoops you have to jump through. So just really finding a way to make it more accessible. And then I would just add that I think in addition to making loans available, there need to be more grants for smaller scale BIPOC farmers, particularly getting back to the conversation around TA. I think there would be a great opportunity to develop some accessible grant funding for farmers who need TA and need some guidance and some support around like their bookkeeping and even just getting like an LLC set up and filing their taxes. These are the things that I know we all encounter in the farms that we work with, and oftentimes we're trying to do that. We're trying to provide those services. I know, again, as Brett said, California FarmLink's doing a much better job of that. But I think if a lot of this is again rooted in farm bill politics, but it would just really be nice to see a shift of dollars to smaller scale farmers who, most BIPOC farmers are, particularly on the East Coast, smaller scale farmers, and making grant funding available, because a lot of these things are just really not suitable for a loan. And so that would, I think, really help uplift many of them that just kind of need like that $15,000, $20,000, $25,000 to kind of help them along, either get started or help them, get their taxes filed, whatever the issue is that might be relevant to them.
Building on all those great remarks, we've been fortunate to learn more about FSA lending practices by being a guaranteed lender, and so the regulations for guarantees from FSA aren't identical to how they make direct loans, but they're very similar, and they can be combined often, for instance, with the joint financing program that FSA has. They can make a direct loan alongside a guaranteed loan to a farmer. And so that, I think that window into how FSA operates has helped us dig into more detail around what could be improved. And I mentioned this in the previous section, but one of the things that we've seen a big challenge for farmers that we work with is needing to repay an annual operating loan at the end of the season and needing to kind of suspend their operation, so to speak, to apply for another loan to be able to have the funds to plant for the next season. And, when you have an established business with a strong track record, that can work just fine. I mean, there's a reason why, this has become kind of the standard structure for an annual operating loan in agriculture. But when you're doing that to a small, developing business, it really is extracting, what little equity they've been able to build up, or the profit that they've made in that year. And so we have been working, in a number of circles, including the National Sustainable Agriculture Coalition and a credit working group organized by Farm Aid in particular, on trying to advance this concept of a development loan that could function like working capital and allow the farmer to make smaller annual payments over a period of time. And that could be combined with an annual operating loan even. So it's to really help the business build systems and get established in a way that, in the future, they may be able to, use annual operating loans. So I'll give a little bit more detail about a bill that's going to be introduced that's addressing that specific issue. And then another FSA loan product that we've been collaborating on and advocating for is a disaster line of credit. So FSA offers a disaster loan, a direct loan, and of course they also have a number of programs that are meant to help farmers, recover from disasters, like we've seen in California this winter, the flooding. But those programs, don't get money in the hands of farmers quickly enough. And so what we are advocating for is a line of credit that would be accessible to farmers that are signed up for NAP or the non-insured disaster assistance program. So if they're already in FSA's books as a farm operating in that area, and they've signed up for the available programs, in the case that there were a disaster, they would be able to draw on this line of credit to be able to start covering the costs that they're going to need to recover. And what we've seen in the last 6 months is that some of these programs, FSA needs to make 2 site visits before the farmer can do anything to start cleaning up their field. And so, we see the need for, a product that can help farmers recover more quickly. And yeah, I mentioned the down payment assistance loans. We, are thinking about ways that we could work with other lenders to develop a national approach to supporting land access and addressing that, the challenge of pulling together a down payment. So I think there's definitely opportunity, to work with philanthropy and taking advantage of the really great programs that FSA has, the joint financing and the down payment assistance program. I think there's some issues around, how much the size limits of those loans, particularly in places, where land costs are higher. And the last thing I'll mention briefly is we, have been fortunate to have support from the Kellogg Foundation to document the way that we are utilizing the CDFI program, and in particular USDA programs, to encourage CDFIs that aren't doing agricultural and fisheries lending to give it another look, because there is, I think, a higher need for integrated capital and supporting agricultural businesses perhaps than other types of small businesses. And there's a strong network of CDFIs that serve small businesses. How could they be thinking about doing agricultural lending if they have a lot of the infrastructure in place, but maybe are looking at more of those perceived risks and maybe not the actual risks, or not knowing how to take advantage of some of the programs that do exist.
Yeah, thanks. One of the things I always like to say is risk is perceived, right? Yeah, I'm also curious to hear a little bit about, well, before I get into that question, we're going to start getting into Q&A. So if folks have questions, please, I encourage you to put them in the chat and we'll get to them. I think one question that I had was just around, where can philanthropic capital, you all mentioned integrated capital, right? So, I mean, you're talking about a combination of investment capital, maybe some concessionary capital, some philanthropic capital, all of these things. And so I'm just curious about what are some opportunities that you see for that? Because, I mean, Brett, you had briefly mentioned a partnership that we have where, FSA just as a rule will not guarantee loans to undocumented farmers. And so, we sort of stood up as a foundation and said well, let us be FSA for those undocumented farmers, so that you could continue to do the work that you do, and, co-recognizing the risk that actually it's not any more risk to these folks, right? But that's a unique place, I think, where some philanthropy can play. And you all mentioned, the need to help reduce some of the barriers that USDA has and FSA has around their accessing their programs. But I'm just curious if there are any specific things that you're seeing around where philanthropic can play a unique role kind of around the edges of where USDA and FSA play.
I would say just all those things, but just building upon kind of, what No Regrets is doing, Esther, with loan guarantees. I think, well, we think that it would be incredibly valuable if there was some sort of a guarantee pool for the funders like us that are, working in this space. We're currently in conversations with a guarantee pool here on the East Coast, I think mostly for CDFIs, and still some work to go. But the idea of it, I think, is something that I think can be. I know that they want to see replicated around the country. There are quite a few, fairly large foundations backing this pool, and I think if we could rally the SAFSF and the FORA funders, many of whom overlap, to maybe get in conversation around this idea of some sort of a community guarantee pool that would be for funders, again, that are in this space, most of whom are not CDFIs. And I know, there's a whole separate conversation going. There was a meeting in DC back in June around, the guarantee program and making it more accessible. Until that time, until, some movement happens on that, I think it would be, or even really in addition to that, I just think, let's face it, private funders are always going to be theoretically more flexible than USDA. So this idea of perhaps, hopefully, maybe some conversation can take place around what it might look like for the funders in this network to talk about some sort of a guarantee pool that can help back BIPOC loans, and whether they're for land or for equipment or whatever. I think that would go a long way to really helping us take on more risk, and thereby also, as Lolita said at the beginning, not passing off any risk to the farmers.
Yeah, I echo what Mike has said. And, when you look at how philanthropic dollars can be leveraged and utilized, is direct support to the organization itself. For like pot liquor, we utilize grants and recoverable grants. A portion of those grants are redeployed in technical assistance to support, and grant dollars to support the farmer. It goes back to meeting that farmer where they are. And they need more than just additional debt. There's often times where they need grant dollars in addition to the grant, in addition to the debt. And so philanthropic funding to an organization can help leverage and maximize the rate of return that's being given to that farmer themselves. And in the case of pot liquor capital, where we're able to use those grants and even recoverable grants to support the loan loss reserve so that we can then grow our portfolio to then support more farmers in the long run, is where those philanthropic dollars can be really utilized and amplified to support the mission of the overall organization, which then leads to support of the communities that we serve.
Yeah, great. And one of the things also that's been occurring to me after having having side conversations with all of you is just also like, what is the need going to be for basically climate related, either disaster or business interruption or anything, right? Because I think, Lolita, with some of the rice farmers, last year it got too hot too early. And a lot of their crops failed as a result of that, and I know that farmers in California are also suffering from that as well, right? Like the strawberries, they ripen too fast, or, it's been too cold. And I think that more and more, we're going to see a lot of this. And so, it's cool to hear you, Brett, talk about the kind of disaster relief kind of lending that you're encouraging at the FSA level. And also just, maybe we need more philanthropic capital to show up to help farmers weather, no pun intended, weather those unexpected things that are becoming more and more common, I guess, in some of the operations that we see, and in all the regions of the United States, frankly. So with that, let's get to some questions. We did have one from Paul asking about geographic areas. So I realize we didn't totally talk about that in the introductions, but it'd be great if you all could talk about what geographic areas you serve.
Yeah, I can start. You know, Potlicker Capital is a national charitable loan fund, and we have a fully remote staff. However, when we originally started this work, we were entering into the South as a geographical focus area, the Midwest, and the needs of the farmer has really changed that mission and that original onset. So right now we're pretty much serving farmers all over the country. We want to build communities of practice where these farmers can work together, share resources and knowledge. So that is happening in the Mississippi, the South. That is happening in the Midwest, where it is happening where we've identified a cluster of farmers here in Michigan. And we're actually looking at Arizona, where we have a cluster of 4 farmers who are actually even working together and sharing knowledge. And so we want to be able to have that flexibility to go where the need is the greatest for the community that we serve. And we do not want to say we're geographically bounding ourselves, but I just mentioned kind of some of the areas where we have a focus, and we have already provided loans and technical assistance to clusters of farmers, and happy to explore other areas where we have not entered in because there is a pipeline of farmers just coming at us from all over the country. And so reach out to myself or someone on my team, and we're happy to dive into more conversations in another geographical area.
Similar, we are based in the Mid-Atlantic, so majority of our work to this point has been Mid-Atlantic, Carolinas, up and a little bit more up and down the East Coast, up into New York, and a little bit New England. We've been somewhat confined, restricted by CDFI rules because we were originally certified to do our work only in Virginia. Those rules will be changing as we all get recertified, so we will not have any geographic limitations, which will be great. And so we too are open. We know that there is a need all over the country, and we're open to working all over the country. I think for us, the real big requirement is that we have partnerships. If we're going to be moving into other parts of the country, we want to, as a relationship lender, we want to make sure that we are in partnership with another organization that has relationships with the farmers, because we cannot be like in every nook and cranny throughout the country. So we want to make sure that whoever we're working with has a good relationship with the farmers that we're working with. So that's a lot of partnership building, and that's something that we really appreciate as just a really rewarding part of our work, is working with other organizations.
That's exciting, Michael. I didn't realize that you were opening it up geographically quite a bit. So great. And Brett.
Yeah, it's great to hear that from both of you. So we are focused in California and licensed only in California. And we started in the Central Coast area, our lending work, and have expanded and now go all the way from San Diego all the way up to the Oregon border. And our expansion into fisheries lending kind of helped with that, working with some fishermen up in the north part of the state. But we are open to working with folks in other states where we can add value, and very much along the lines of what you described, Michael. The exploratory conversations that we've had about that are really based in partnering and having the organization that's managing the relationship with the farmer being the lead. But if there's a way that we can support farmers in other places, happy to explore that.
Great, thank you all. So this is a question from Gwen that's directly to Michael about the LND program. But feel free, Lolita, particularly you, to chime in on just sort of succession and fractional ownership and heirs property, because that's a big issue, I know, among a lot of farmers. But the question really is about how, so the LND loans should be repaid when the land is sold, but how does that allow land to be transferred to successive family members and owners?
Yes, definitely a really good question. One of our partners on the ground was Black Family Land Trust, so we were mindful of this issue from the get-go, and it's one that, you know, we really do want to make sure that we have really a good handle on. We're also working with the Sustainable Economies Law Center, which is out in California, to get guidance from them. It's really hard to find, you know, guidance from, you know, sort of your run-of-the-mill lawyers. I mean, even, you know, top-notch lawyers in New York, and they just, you know, this is like, what, you want to do what? So yeah, this is, you know, certainly something that we are very, very mindful of. The whole idea is to actually transfer title right at the transaction. So there's no, it's not like, again, there's no, this would be an unsecured loan, so that there would be no title held by the lender. The goal is definitely to make sure that all the documentation is written in a way that would allow for allow for transfer, but we do realize that that is a complicated issue, and, you know, certainly one that we have not yet totally fleshed out. It's, you know, again, a key component to like piloting this idea and really trying to work through that. We actually did have a pilot project in New York that Esther knows a little bit about. We worked on that through the spring for a variety of reasons. That one didn't go forward. They wound up actually just leasing the land. But we did work with some lawyers at the Pace Food Law Center. And so we're getting a lot of opinions on this. And ultimately, you know, a big part of it is making sure all of that is ironed out, because the goal of this, that we've always said from the beginning, is like, we never want to do this if there is ever jeopardy of somebody losing their land, or, you know, perhaps the bigger issue is getting hit with some sort of a tax burden. And so that's kind of what we're trying to figure out, is like, how do we get philanthropy moving into, you know, this sort of this kind of goal of reparations in a way that does not create any kind of a tax issue, either for the giver or, more importantly, for the receiver. It would be a, you know, a black or brown farmer buying land. Last thing we want to do is all of a sudden have them have a tax bill for gift tax. So those are issues, you know, that we are trying to work out. And again, it could very well be that, you know, there might need to be some sort of form of a campaign, a lobbying campaign around the tax issues around this. I think that is something that will need to happen in time to, I think, allow greater flow of wealth, to redistribute wealth. But it's a little beyond a lot beyond my pay scale. So it is something that we are working on.
Yeah, and I would also just say for folks on the call, it's the 501c3 structure for you all is unique in the sense that you're able to do 0% loans to farmers and not sort of trigger the gift tax.
Yeah.
You know, for us as an LLC, we do trigger that if we make a below market loan, and so we're sort of beholden to the federal minimum rate. But it's great that as 501c3s, you all can do things that are like 0, 1, 2% kind of loans. And the next question is super interesting from Jeff, talking about revenue streams, funding or revenue streams coming from the delivery of environmental services by farmers. And I know this is a hot topic among folks in regenerative ag. The second part of the question is anything similar to crop insurance for small farms. And I know that, Brett, I know that you've done some work in that. And I think you've piloted also an interest rate reduction program too around conservation practices. But curious what folks are seeing in that space.
Sure, well, I can start. So most of what we have seen in terms of environmental services is related to ag and conservation easements. So supporting kind of bridge financing, primarily when they're someone owns their land already and is looking to put an easement on the property, you know, and is in a financial situation where, you know, they need to a bridge to when the easement actually gets funded, you know, which could be a couple of years down the road. But as Esther mentioned, we've also piloted a loan product working with some local resource conservation districts that are providing technical assistance to farmers that we work with. So helping them do conservation planning and implement practices, related to, just good agricultural practices, but also climate resilience. And so we're in the process of developing some new products that aim to combine technical assistance with lower cost financing with the state association of resource conservation districts. So we're definitely excited about that. And there's a bit of nuance in, there's cost share programs that farmers can access, and sometimes it's just bridge financing that they need, right? Because those programs are typically reimbursement based. But also there can be situations where the farmer does need to cover some of that cost, or so providing both bridge financing and the term financing to help them implement those projects. And the crop insurance question is a really interesting one. We have a proposal pending right now to look at that issue in more detail. We have encouraged farmers to sign up for the existing programs such as NAP and the whole farm revenue protection. They can be helpful, but there are also definitely improvements that need to be made. And we've recently started talking to the Farmers Business Network, who offers some, I think, fairly innovative crop insurance products, but they're more meant for larger scale grain farmers in the Midwest. And we're wondering about how they could be adapted, and how organizations like ours could be packaging loans along with insurance products. Because I think it's going back to a topic we were talking about a few minutes ago, related to climate resilience. I mean, what tools do we have right now? Well, I think we need to be stress testing our underwriting more, and thinking about scenarios that are not as favorable as the ones that the farmer presents, or that we may think, and really be prepared for those. In this winter in California, we've seen that reality, and $10,000 grants that we've been able to make to farmers that were pretty heavily impacted, thanks to support from local community foundations, it doesn't go very far. And so I really appreciate the question about crop insurance, because I don't think that, with all the improvements that could be made to the federal programs that subsidize private crop insurance, are they ever going to really meet the needs of the farmers that we serve? So I think there needs to be similar to the guarantee issue, there needs to be a private solution to that.
Yeah, I'll just chime in on the crop insurance piece. We've had the pleasure of working with one of the, I want to say he may be the only Black crop insurance provider in the country, and he's located in North Carolina. And so crop insurance has been a barrier for a lot of farmers and farmers of color, especially. And so having someone who can come in with that added value and be able to provide some options for crop insurance, it's very important. And so, Jeff, if you're looking for a referral to get some crop insurance, just reach out. I know that the SAFSF team is going to share our contact information in a follow-up email. So happy to continue that conversation.
Yeah, crop insurance, it's a maze. We have funded some work to try to get new crop insurance that's related to environmental services on the table, and just watching the process of that whole thing, it's crazy. It takes years just to get a new insurance product out there. So you have to be in it for the long haul. But I think there is potential for philanthropic funding to come into play in that space, if there is will and momentum to do that. I noticed none of you had talked about carbon credits. Is that anything that's come on your radar? I mean, I have my own thoughts about that, but I want to hear from you all.
Yeah, it has come on Potlicker's radar, and we see it. We're not looking at it as carbon credits, carbon sequestration at this time. the way that we are approaching this is through agriculture forestry, ag forestry, and looking at it as a way to work with farmers of color to help diversify their land in doing planting trees and using it more in that lane. And if there is the opportunity for some carbon credits that can then shift to the farmer in an equitable way, where it's not extractive and the farmer is actually getting the fair percentage of what's due to them and not pennies on a dollar. And so it's a ongoing conversation, and Pot Liquor is looking to see how we can be an added value in helping bring the ag forestry to the farmers that we're working with.
Yeah, I would just echo that too. It's same kind of approach is really for a lot of the farmers we work with. I mean, they haven't even really gotten to the point where like they can have that conversation. They just need a lot of support around like how they can be better stewards of their land. So for us, a lot of that is really more about just providing the connections, the technical assistance as much as we can. And then ultimately, again, it comes down to funding, funding the needs that they have, whether it's training. Fortunately, with the Climate Smart Commodities grant program now finally getting rolling, we were talking yesterday to one of the recipients and looking at collaborating with them around the Southeast to try to get some funding into the hands of farmers so that they can get trained on how to be better stewards of the land. And then also get some funding around, some infrastructure they need. But from what I understand, it doesn't cover equipment. So, there could be opportunity again for maybe some private, money to come in and support that. Because again, for these farmers, like you can't even have the conversation about carbon credits until they actually are, in a position to be knowing how to steward their land better.
I would just add, land tenure, is a real barrier to this being something that the farmers that we work with can engage with. And so, one of the, issues that I think about is how can we be working more effectively with land owners as partners in this, because really they need to be committed to supporting their tenants and advancing, these kinds of efforts. If particularly in California, where at least half of the land, is leased by farmers, and many of them are annual leases, and so that lack of incentive to really invest, even to your point, Michael, even if they know what they should be doing, does it pencil out for them to do that given the way their lease agreement is structured?
Yeah. There's also some great stuff in the chat from David of self-help around crop insurance as well, if people want to look at that. So we're starting to wind down the final minutes of this panel. And one of the things that I like to do, particularly when we're in a group of funders, is for a call to action. So I'd love it if each of you could take maybe 3 minutes to just let funders know, like where can they, slot in here? What can they do to help support you and the work that is needed to help farmers, particularly farmers of color, build equity in their businesses? Maybe Michael, I'll let you go first since you've been going last this whole time.
All right, great. Thank you very much for asking that question, Esther. That's always very gracious in this type of a forum. So, again, I think it comes back to so much of what we've talked about. We are so grateful to a lot of impact investment money that allows us to do our work and provides a lot of flexibility. It's low cost capital, very flexible, but ultimately when you're talking about, building equity for farmers of color, it's where the philanthropy comes into play. So as I alluded to earlier, allowing us to continue to do 0% lending and to try to really develop a more, more effective way to redistribute land back into the hands of BIPOC farmers. It is going to require a larger commitment of philanthropy. So those are definitely conversations that we would love to have. And then also, again, supporting just more of an integrated approach around some small grants. Like, we are in the process of really taking a hard look at the way we do our technical assistance. And so we've recognized, again, that as I was mentioning earlier, it'd be great to have USDA step in, but I don't know when that'll happen. So in the meantime, just being able to provide some grants to support farmers with needs they have just to get to the point to apply for a loan. Because again, many of them, just like, they come to us and they don't have books, they don't have a business plan, they don't have much at all, except for some things scribbled on, literally on a piece of paper. And so just getting the resources into their hands to be able to hire a bookkeeper and just get really organized to be able to prepare for a loan, I think would be really beneficial. And that can really come through some re-granting that we can do to support those farmers. So thank you for the opportunity to pitch that.
Great. Brett?
Yeah, so building on what Michael said, I mean, first off, consider ways that you can activate your portfolio to combine investments and grants to address, some of the systemic barriers that we discussed today. And I think Michael gave some good specific examples. And then additionally, the land capital markets program that Michael mentioned, FarmLink, also applied and was not funded, but similarly extremely impressed by the groups that were selected for funding and excited about the work to come with those groups. But I think an opportunity for you all could be to review the applicants and the awardees of that program, because I think, yeah, they're the ones that are going to be doing the innovative work over the next 10 years, related to what we've been talking about today. And then just a little bit more on the policy front, Representative Strickland from Washington is going to be introducing the Beginning Farmer and Rancher Development Loan Act and looking for a co-sponsor. And the National Sustainable Agriculture Coalition is leading that effort. And then the Fair Credit for Farmers Act is expected to be introduced by Senator Gillibrand. And that effort is being led by Rafi and the National Family Farm Coalition. So a couple of bills to track related to, the topics that we discussed today.
And Lolita, I'm going to let you have the last word on this.
Thank you. I appreciate it, Esther. This has been a great conversation. And I said this earlier, and, Pot Liquor Capital as a charitable loan fund, we really believe we're the only charitable loan fund that's designed to bring that reparative capital to BIPOC farming communities and working to build the resiliency of these farming communities. We do not want that 4% to go any lower. It would be great if we can maintain and grow that. And there's that need to make sure that it does not fall below 4%. And changing debt to equity does require intentionality when working with BIPOC farmers and ranchers and removing the extractive practices. Pot Liquor uses the philanthropic dollars to support the farmer. We use program-related investments that are redeployed as flexible capital to the farmers. And so my call to action to the folks on this call who have that ability to really inform and shift the dollars towards organizations who are doing this work, to come alongside organizations like Pot Liquor, who are providing solutions and services directly to the farmers of color who need it. And that's what I would implore everyone to do is really these farmers are in the communities, serving the local communities, creating that systems change and empowering them to continue to do what they do best is needed and necessary. And so please reach out, and happy to continue conversations with any and everyone who's interested in learning more and more importantly, partnering with us to do this work.
Great, thank you. I just want to reiterate what all three folks have said, which is that, it takes a lot of work to do the work that they're doing. And so, you know, philanthropic capital as a source of, you know, potentially 0% loans and whatever is great, but it also costs them money to get that money out the door. So I'm a huge, big fan of unrestricted operating grants because it helps them, frankly, do the work that they do. It's what makes them successful. It's what makes their farmers successful too. So just want to reiterate that. I also just wanted to highlight a couple of things that I heard throughout the panel today. One was the potential of like a guarantee pool, which I think is super cool and should definitely, you know, keep the